Yo guys, Trader Main here. So want to get a quick update out after today's action going into CPI tomorrow. So most likely for me personally, I'm probably not gonna position myself going into CPI. I think if you weren't long from a little lower, we are coming up into resistance. So, being long into, an event that is known to cause volatility, or trying to long into an event that's known to cause volatility and, whipsaw in either direction, just not really a gamble I'm interested in taking. Would rather wait, let CPI happen in the morning, see what things look like afterwards. So we'll start with Bitcoin here. So as you guys know, from the long we took down there, the initial plan and the initial target was this range high. Then the next was this fair value gap getting filled, and then the last target was the daily supply here, that 12-hour bear, that's a daily bearish order block, but it's also a 12-hour bearish order block here. But that was kind of the plan, right? So you have your sweep, there's your candle. So we're into that now. So what does that mean? Well, it means that this would be an area where we want to look to see if there's some signs of distribution. We've had a pretty aggressive up move here, very shallow pullbacks. So it's like, little pullback, rip, sideways, rip, one candle pullback, rip, one candle pullback, rip. But as much as I think there should be caution, had obviously into resistance, things are pretty bullish, and I think equities still have higher to potentially go. So if we are going to remain bullish through here, doesn't mean that we're just going to go like this. But, maybe we, get another leg up and then some sort of retracement and then another leg. I don't know. But this is our previous month's high right here, right? So that's December's high. This is December's low, right? So we traded near the low. This seems like the most obvious draw on price next. And if you actually look here, we had a 12-hour order block here, broke above. That's the confirmation that's an order block. 1, 2 retest, took out yesterday's low, pushing away. So we're actually seeing some nice, movement happening just from this order block right here. And that could be enough, in my opinion, to propel us to last month's high, which is about 18,600, 18,379. So that seems to be like the next draw on liquidity for me. We are into resistance. So personally, I'm not going to just long here and target, up there. I'm going to wait and see what things look like after CPI and see if I can find a setup that I like. But that would be the draw if we're going to have continued upside. Now let's talk about Ethereum. So Ethereum here, I posted this chart in Telegram and Discord. When we continued to move up here, I said the obvious draw seems to be these relatively equal highs. You have 3 highs here, right, that are very, very close in price. And then you actually have another high that formed the other day. So you have 4 relatively equal highs right into this 12-hour fair value gap. So that was kind of like, okay, I think this is the draw on liquidity. I posted 3 charts. I posted Bitcoin. I said I think the draw is that daily supply at 17.5. I posted this where I said I think the draw is 1350, right? Those equal highs. And then I posted SPX, and I think I said the draw is like 4K. So bias was up. But the mistake I made here is I said, okay, we have a high time frame liquidity objective to the upside. But we did have this sweep here on the 12-hour. And so it gave me my setup that I like. So we have Monday's low trading right here. I'll put that on real quick here. And I said, okay, well, we just did a 12-hour SFP and an hourly SFP above Monday's high. So if we get a 1-hour break in market structure, which we got here, I'd be willing to short, stop here, targeting Monday's low. And then from here, I would be looking for that next leg up to that draw on liquidity. So that was the plan for this trade. I'm still in it, but it's not comfy. I'm very much underwater. My entry sucks. And I almost got stopped out. So I'll tell you, so all things not good. But I'll tell you kind of what I think I did wrong. And this can be a good learning lesson for you guys into how you journal, right? So this is the kind of stuff I would write in my trading journal when I was more actively journaling my trades. When I was early on in my career, I journaled after every single trade. Why did I take the trade? Did it work out? What was the risk reward? What was my reasoning, obviously, for the trade? And then after the trade, okay, was it a win or a loss? What was the return? How much profit? If it was a win, great. what was the entry model I took? Was it, my in this instance, it'd be a H12 sweep, H1 sweep, break in market structure, retest breaker. That would be the model. Whereas if it's a loss, you want to say, okay, what maybe went wrong? Sometimes you're just wrong, right? So in this instance, all of my entry criteria were hit, right? So I would write that. I would say all entry criteria hit, but I think I was fighting the high time frame order flow. I think the main thing that I was too focused on was just my entry, right? And I always talk about this. I say, okay, your entry trigger, right? This for your short, let's say, you can find this happen everywhere, but not every time is it going to give you the results you want, because it's not enough to just have the trigger. You need this around it, the context. Where is it happening, right? So as much as the context kind of lined up for me here in that, okay, well, we're into that 12-hour fair value gap. We are above, we swept Monday's high. That context made sense. But I think the most important piece that I got wrong and I miscalculated was, where's the high time frame drawn liquidity? This is internal range liquidity. So here's your trading range. This is liquidity within this range. When you're taking a trade, right, you're entering based on internal range liquidity. So if this is your range, internal range liquidity, and your objective is external range liquidity, right? So you're getting filled on internal, targeting external. Not always. Sometimes you can target internal, whatever. But that's generally how it works, or what I look to do at least. So this setup still made sense to me, right? And this could reject here. We don't know. It could reject here and it could roll over. I don't think it's going to, but it could. And I could still end up being right. But I just think that the mistake I made was the high time frame draw on liquidity is right here. My draw on liquidity on Bitcoin was higher. So I was shorting Ethereum, right? And Bitcoin was trading just below its liquidity objective. And the stock market, I was bullish on, right? I was bullish down here. I was bullish on this move up into the breaker, which is this white line. Then we got the pullback. We swept Monday's low. I said, this looks good to go higher. So my bias was to the upside on all of these correlated assets. Yet this far, right, this white line being the drawn liquidity, we're this close to it and I'm trying to take a short. So I think that's where the mistake happened and why this trade did not work out. We came back. This retest, I want to see this on the inverse, right? On the breakdown, when we have our sweep and then our breakdown, I want this to be the aggressive part. I don't want the retrace to be the aggressive part. This tells me that, price is strong, right? We ran these lows and we instantly zoomed right back up. Yes, we briefly closed this as a sweep, right? Which is like, okay, maybe this is just a stop run, but this just looks strong and the liquidity objective is just so close. Equities look strong. Bitcoin looks strong. So I think that's kind of where it went wrong. Real quick, guys, this video is brought to you in partnership with Utrust. So as you guys know, I've been working with Utrust for a while. This is a company that I have invested in personally, and they've continued to iterate and grow and get more market share over the last couple of years. And with all the craziness that's going on in the crypto space right now, it's great to see a company like Utrust still focusing on privacy and making a real world use case for crypto for payments. So you can do online payments with digital currencies. It gives e-commerce businesses the ability to accept digital currencies and get all the benefits of that you wouldn't get with traditional payment methods. Used in over 180 countries, nearly every industry. They support more than 30 currencies worldwide, and they're partnered with some of the biggest businesses and organizations around the globe. What's really exciting is the transition from Utrust to X Money. X Money is going to be part of the larger vision of the Multiverse X, which is going to be encompassing decentralization, privacy, and the metaverse. And Utrust, which will soon be X Money, will be handling the payment aspects of that vision. So very exciting stuff coming from the Utrust team, and really appreciate them for supporting me and the channel. The other mistake I made here is I had drawn out my breaker from the wrong candle. So pretty amateur hour, but we have our break-in market structure here, right? But the actual breaker is up here. So in reality, I should have been entering here, 1337 and above. And then, if we go back a couple candles here, all of a sudden, this doesn't look nearly as bad. If this closes as a sweep into the breaker after the breakdown, that looks pretty good, right? And even so, after this candle closed, right, I could have put my stop right here. Entry here, stop there, target Monday's low. That's a huge risk reward trade. That's a big trade there versus my stop is here. And I actually started entering as soon as we started retesting the break in market structure level because I thought maybe it was just going to be shallow, but I was wrong. So those are all the reasons that I think the trade didn't work out. But again, it ticked my boxes, right? So you have your trading checklist. It ticked my boxes. However, just because it ticks all the boxes, it doesn't mean you're always going to get the trade right. And I think the mistake I made is one of these boxes is where is the next high time frame draw on liquidity, and it was above price. If that's the case, why am I looking to short, right? So I either disregarded this tick or I just miscalculated, but it happened. So, the point of this kind of video, I think hopefully it's educational and it can help you with your journaling and your learning and things like that. But to also show you that I'm human. I don't get every trade right. I make lots of mistakes, and there's a big difference between charting and trading. I predicted that we're going to go higher on equities. I predicted that we're going to go higher on ETH and on Bitcoin, but I didn't long any of those three moves. So does it matter that I posted the right chart on Twitter or in Discord? It does not matter at all. So there. So yeah, we'll look equities here real quick. We had our high time frame demand, the sweep. The initial target was this breaker right here, had that rejection, right? And then when we came right back below Monday's low, had the sweep below Monday's low, break in market structure above, that's risk on again. And the obvious objective was here. So nice to see that move higher. Overall, I think if Bitcoin is able to take out last month's high, we open up to this here, right? This fair value gap up here. So last month's high would take us right into this fair value gap. We're talking 19K plus, which is pretty fucking bullish. And if you remember from my stream on Sunday and the condensed stream, which I uploaded yesterday, right, we had this idea here. Maybe this is just some sort of big deviation. And if we get above here, we could trade right up to here very easily. Like if we're above 19K, I think you target 22. So it's looking pretty bullish. If equities continue to behave, I don't know, could be exciting. Gonna keep monitoring. Like I said, CPI tomorrow, so I don't think I'll trade first thing in the morning. I'm trying to wake up for New York session. I did it a little yesterday. Today I woke up and I was online for the entirety of New York session because it seems that's when the action's happening, and I'm in the business of making money right now, and I need to be awake when most of the volatility is occurring. It sucks that, I got to wake up at 5:30 in the morning because of where I live to take advantage of that. But it is what it is, right? Money don't sleep. So hopefully this is valuable to you guys. If you like these types of videos, right? If they're of value to you in that, like, hey, actually this helped me because I took the same trade, or I was going to take a trade, but then I didn't, or I never know what to write down after a trade doesn't go well. I just kind of walked you through my thought process and how I would be journaling this trade post-mortem, and hopefully that's helpful to you, right? So dollar still unable to really, do anything, just looks weak. I do think that the bottom is close on the dollar, right? Like I drew this out being like, maybe we get this move down, one more big move up on risk, and then a lower high, and then everything dooms. I don't know, right? Or sorry, rally on crypto doom, and then the bottom's in. I don't know. But yeah, we'll keep on keeping on. Sometimes you take an L, man. It's part of the game. All right, guys, hopefully you enjoyed the video. Thank you.